That will be the only video you need to learn the market structure. In this video I will teach you how to execute structure analysis, how to identify supply and demand zones, support and resistance, how to study the price action. And watch this video until the end, because at the end of this video I will teach you how to apply smart money concepts with the structure analysis. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. So what exactly do we do when we analyze the market structure? We take a step back, we analyze the historical price action, and we are looking for the way to organize this price action. We are looking for the important swing highs and swing lows, and we are looking for key levels, supply and demand zones, and support and resistance. And remember, traders, that we can analyze the market structure on any time frame. You can analyze the market structure in a daily, 4 hour, 1 hour, 15 minutes short and stuff. But remember that the most relevant structure is always on a daily. So for today's video, we will study the structure on gold on a daily time frame. And when you study the market structure, for you it is very important to know from where to start the structure analysis, from which point exactly you analyze the structure. Because if we go left, we can see that the historical perspective here is kind of infinite. And for us, it is definitely important to identify the starting point. Traders, for more education, for more trading, for live analysis and tips, do not forget to check my premium educational group. Inside you will get the access to my daily live streams with the live trading and Q&As. You will get the ebook and video course teaching my trading strategy. For more info, check the link in the description below. It is vasilychatry.com/private group, or text me in one of the social networks. I will give you more details. And of course, the starting point primarily depends on your goals. So for example, if you're an investor, definitely you need the longer term perspective. And if you are a day trader, you need the shorter term perspective. If you are a day trader, for you it is more than enough to take into consideration the last 4 to 5 months. Such a perspective is more than enough to identify the historical structures, to identify the important highs and lows. And now let me share with you some theory, because it is very important for you to realize that the market always moves in zigzags. And if the market is trading in a bullish trend, we see the sequence of higher highs and higher lows. And when the market violates the previous high, we call that the break of structure, and it is the indication that the bullish trend continues. However, when the market starts falling and violates the level of the last higher low, it is a very important bearish signal. It is the so-called change of character. And of course, for us, that is the signal that the trend is changing, that the trend is reversing. And the point, the high from where the market dropped and violated the level of the last higher low, is extremely important, because from that level the smart money started to push the market heavily. Same idea is with the bearish trend. When the market is bearish, we see the sequence of the lower lows and lower highs. And when the market starts growing and violates the level of the last lower high, for us it is a very important signal. For us, it is the so-called change of character. It indicates that the market is changing the trend, that the market is now bullish, that even though it was bearish previously, that violation is the indication that the sentiment on the market is changing and that the market becomes bullish. And again, in such a situation, the low from where the market started to change the trend, the low from where the market bounced and violated the last lower high, is extremely important, because from that low the smart money started to push the prices heavily. So such a point will be very important in our analysis. And as we discussed, the market always moves in zigzags. So in order to properly study the market structure, we need to underline the impulse legs. We should analyze the price action. We should identify important bullish and bearish legs, and we should underline them. That is what we need to identify the trend reversal. That is what we need to identify the trend direction, and that is what we need to identify the supply and demand zones. But we will return to that later on, and for now focus on the impulses. Focus how the price moves. Focus on the points from where strong bearish or bullish movements initiated. After analyzing the impulses, let's study what was happening with gold. You can see that first, the market was growing sharply. You can see that the market was trading in a strong bullish trend. Then that high was reached. You can see that we saw a bearish movement. From that, the price set the higher low from where bullish movement initiated. But instead of going higher, you can see that the market dropped, and you can see that the level of the last higher low was violated. That is the change of character, traders, and that signifies that once the market violated that structure right here, the market started to trade in a bearish trend, right? Then, however, you can see that again the market was falling. We were trading in a bearish trend. But then, once that low was reached, we bounced, we set a lower high right here. We dropped, we set higher low, and you can see that here the market violated the level of the last lower high to the upside. So here we got the change of character. So from that analysis, we can already identify two very important points. That high, from where smart money started to push the prices down, and that low, from where we saw the market reversal. Then if we zoom in the chart, we can also spot that here the market started to trade in a bullish trend, right? But once that high was reached, again, take a look, traders. Here we got the so-called change of character. And again, the market here started to trade in a minor bearish trend. So we have identified one more very important structure here. From that high, the local bearish reversal initiated. We have underlined three very important points. And of course, traders, these points will be the key levels. These points will be the support and resistances. However, you should always remember that most of the time the key levels are the zones. And taking that high, for example, remember that we draw the key structure taking into consideration the high based on the wick and the highest candle close, right? So that will be our resistance. Talking about the supports, our support will be based on the lowest wick and the lowest candle close based on that. So here will be our important support. Again, here we have a strong resistance, and that resistance will be based on the wick and the highest candle close, traders. So that will be our important resistance. Now please note that some support and resistances we will call the supply and demand zones. We will call the resistance the supply zone if it is based on multiple impulse legs, if it is based on multiple tests of that structure and consequent strong bullish or bearish reactions. For example, traders, that resistance. Take a look how many times in a row the market tested that, and you can see that each time the market dropped from different points within that area. So we assume that the selling orders are placed within that entire area, from its low to its high. Yes, everywhere are the selling orders, and we'll call that area the supply zone. While that resistance right here, we'll call just the resistance because it is based on just one impulse leg. It is just based on this one move. I hope that you feel the difference. Here we have the zone, that zone right here. It is the demand zone. It is the demand zone because it is based on two impulse legs. The initial strong bearish impulse from where the bullish reversal initiated, and the second bearish move where the price set higher low and from where the price bounced. So here we have the supply zone, the demand zone, and the resistance. So far here we spotted three important structures, and of course we have more structures right here. Simply put, the structures that we spotted so far are the most important. But I wanted to show you some other important historical areas to pay close attention to. Take a look, traders. We have a very important support right here that was respected by the market multiple times. Then it was violated and it turned into resistance, from where we saw a strong bearish reaction. Then again it was broken to the upside, and you can see that then it turned into support, from where this week we saw bullish movement. By the way, you can see that I underline these structures with different color. Simply put, we will consider the yellow structures the most important, the most significant ones, and the orange structures are just the important structures. I hope you understand. So you can see that here it is very hard to get where exactly is our zone, whether it should be that wide or it should be narrow. Traders, remember that when you draw the key levels, when you draw the supply and demand zones, what matters for you the most is the recent price action. So what was in the past becomes more and more and more irrelevant, and what matters to you is just the recent price action. Just recently you can see that the market bounced from that area. You can see that the market was falling. We closed right here, and here was our low. So that will be our current demand zone. Just a little bit higher, we have a strong resistance right here. Yes, and you can see that from that structure just recently we saw a strong bearish reaction. Now if we zoom out the chart, we can also spot important supply zone right here. So you can see that in the past it was a very important zone of demand, and after the breakout, of course, it turned into the supply zone, so we also should take that into consideration. And the last horizontal resistance that I see is over here. You can see that I call that the resistance simply because it is based on just one leg of a move, and you can see that from that we saw a strong bearish reaction. And you can see that I draw that considering the candle close and the wick. Also, traders, remember that we have the horizontal structures and the vertical structures, and the vertical structures are the trend lines. And when you're looking for the trend line, you should remember that the valid trend lines will be the trend lines that were respected by the market at least 3 times in a row. Here, if we take that high and draw a trend line, and you can see by the way that I draw the trend line strictly based on the wicks, you can see that we have a very important falling trend line that is a strong vertical resistance, and that is the only vertical structure that we can spot here analyzing gold. Here's our structure analysis for gold, and if you are still wondering how to apply the smart money concepts, keep watching because I will return back to that in just a minute. For now, what we can conclude is that first of all, we spotted that the market was bullish, then it reached that high, from that it started to trade in a bearish trend, then we got a bullish reversal right here, we became bullish, and from here again the trend changed and now we are bearish. And then we identified the most important structures. We identified 3 most significant structures from where we see the change of character, and also we identified the historical key levels from where strong bullish or bearish movements initiated in the past. So once you executed the structure analysis, first of all, you know where the market is going, you know the direction of the market, and you also know the important historical structures. From these structures, you will look for trading opportunities. If the market is bearish, for example, from the resistances, you can look for trend following trades. And if the market is bearish and you see the test of important support, there you will look for counter trend trades. So from key structures, we will look for trading opportunities. And once the market is approaching one of these structures, you should look for the confirmation. And let me show you how smart money concept traders look for confirmation. When the smart money concepts traders see the test of key structure on a daily time frame, he starts analyzing the lower time frames and he looks for the confirmation there. How does he look for the confirmation? He executes the same analysis on the lower time frames. Here on an hourly time frame, you can see that I have analyzed the impulse legs. I analyzed the legs of the move. And here we can spot that the market is trading in a healthy bullish trend. However, take a look what happened when the market approached that resistance. You can see that we set a new high, but then we dropped, and you can see that the market violated the level of the last higher low. So the trend right here was violated, and here we have the indication of the change of character. We see that smart money started to push the prices lower, and the minor bullish trend that we got on an hourly time frame is now violated, and you can see that then the market started to fall. One more way for the smart money concepts trader to look for confirmation is to look for the so-called imbalance. You can see that here we got the second test of that key structure, and take a look how the market was reacting to that. You can see that again, we were growing steadily. We got a minor bullish trend right here. But after the test of that structure, we formed right here huge bearish candle. That bearish candle signifies that big players opened big positions, and for that reason the market dropped so quickly and so heavily. We will call that candle the imbalance. Yes, and that is the perfect indication of the presence of the big players, and you can see that then gold dropped much lower. Market structure analysis is the most important element of the market analysis traders, and better you analyze the market structure, higher is the accuracy of your predictions. So please practice that, try that, and never neglect that. For more education traders, do not forget to check my premium group, the link in the description below. Also traders, if you want me to share the exact strategy how to trade the smart money concepts with entry, stop loss, and targets, let me know in the comment section. Also traders, please like this video, subscribe to my YouTube channel, and I will see you soon.